Welcome back. Now, TeamLease is in focus because earlier this week, the company acquired stake in two companies, TSR Darashaw, and the other one is Crystal HR, which will expand the company's services in HR tech. To talk more about it, we have with us Ramani Dathi, CFO of TeamLease Services. Ramani, thank you very much for joining in. This is Reema here. We'd spoken just recently, and you had indicated that the company is very actively closing in on acquisitions in the HR tech, and that's played out. So can you tell us these two acquisitions, what does it do in terms of revenues and in terms of EBITDA, and how much have you paid for these two acquisitions?
Hi, Reema. Good morning. So we have been saying that we are actively looking for M&A opportunities, especially in the HR tech space, because the addressable market is huge. TeamLease as a brand is very well known with corporates in terms of payroll management, employee engagement, payroll-related compliance management. And we are looking for expansion in HR tech space, which gives us additional portfolio of services and solutions, which we can cross-sell to our existing staffing clients, as well as create it as an independent P&L. So with that intent, while we have organically started our own HR tech suite, we are also looking for M&As that can roll up and expand the service portfolio. So now with TSR Darashaw, we are able to access a large enterprise base of clients, almost with 170,000 payroll records. And these are some of the largest BFSI clients that we are talking about. So the opportunity for upselling as well as bringing in more value addition from TeamLease is huge. And we also want to use this as an opening balance to acquire more clients in BFSI space as well as enterprise segment. Now coming to the second one is an interesting thing, the Crystal HR, which is a HRMS platform. There are very few HRMS platforms which are profitable in the country right now. Most of them are not making profits. The cost of acquisition is very high in this space. However, Crystal HR has managed to build this business over 20 years, focusing on mid-segment and mid-segment of enterprise clients. So they have close to 3 lakh payroll records being serviced on their platform, working with almost 400 plus corporates across the country. While they have more concentration, more in the south of India, we want to use TeamLease brand and take it across other geographies. So now with TSR Darashaw and Crystal HR, we have a larger portfolio, both in managed payroll as well as tech-related solutions on employee management.
Understood that, Ramani. The other question that we want to ask you is in terms of valuation, how did you value these companies? We understand together you've paid a little over 40 crore for both of these acquisitions. What was the multiple that you've given? And you also mentioned about both cross-selling as well as upselling opportunity. Could you give us a number or quantify the opportunity size that you see with both of these acquisitions?
Yeah. No, for both the deals, we went with the profit multiple since TSR Darashaw is more of a service business. So there, the PBT multiple is slightly on a lower side, which is about 5.5 times. There are also some other adjustments which we have to take into consideration. Crystal HR being a product business, it's slightly above 7 times of the PBT. So this also is very competitive in terms of the other deals that have been taken place in the recent past in HR tech space. Sorry, I missed the second part of your question.
Would you be able to quantify the cross-selling, upselling opportunity?
I think it's too early to exactly quantify because right now what we are assessing is for the pressure that we are seeing in staffing PAPM, especially Crystal HR will give us additional services which we can upsell to the clients in our staffing segment, and that can help us expand PAPMs marginally. Over and above that, since these two businesses put together will contribute close to 5-6% of our profits, that will also help to take up the overall group profitability.
And just to get the numbers in, what will it add to your revenues and at the EBITDA level? And as a percentage of, say, FY24 numbers, what would it stand at? How material are these?
On revenues, they are not material, Reema, because in terms of top line, their contribution is like less than 1%. They're about 22 crore in revenue. But as I mentioned, in terms of EBITDA contribution, based on their current run rate, it would be about 5 to 6% contribution on our group EBITDA.
Ramani, just want to take you to the underlying business itself. How are demand trends playing out both in general staffing as well as specialized staffing? You did mention last time that it's going to be more of a volume game for you. You're expecting steady state margins. So in Q3 especially, has there been a pickup you've witnessed?
In Q3, barring two sectors, which is BFSI and IT services, the demand has been fairly stable, be it consumer verticals, telecom, retail, pharma, quick commerce, across all these sectors. And manufacturing is, again, one of the largest headcount addition sector for us in this quarter, as well as next quarter as well. So we are seeing steady demand. BFSI, as we called out earlier, because of the RBI restrictions, especially in the unsecured loan space, NBFCs and staffing profiles. So there has been a kind of pressure on volume addition in BFSI space. Coming to IT, I think it would take 1 or 2 quarters for us to see an actual recovery. As of now, at least the headcount decline has been ceased. We are seeing marginal improvement in net addition in IT space. But for us to call it as a recovery, I think we are at least 1 or 2 quarters away.
So Ramani, as we look ahead to the next year, what would be the top 3 priorities for TeamLease? You'd spoken about the acquisition, so that's played out. So that's done in 2024. So now for 2025, your top 3 priorities.
So definitely it's profit expansion. So that's our topmost priority, because over the last 3-4 years, the profits have been flattish. So our topmost priority for next year is to make sure consistent profit expansion quarter on quarter. That's the topmost. Secondly, in terms of margins, because again, be it in staffing or specialized staffing or at group level, the margins have been diluted over the last 3 years. So the primary focus will also be in terms of how can we bring in solutions which can help us expand the margin percentage as well. Lastly, again, be consistently warm on our top line growth, maintain 20-25% revenue CAGR.
Thank you so much for joining us, Ramani, and we wish you and your team a very happy 2025. Well, moving on, let's now take a short break. Up next, we'll discuss market fundamentals with Anirudh Garg from Invest at PMS.